Today I want to do this video over by this spot that I'm always driving by with all these boats. I see all these boats docked down here on this little inlet, and I just drive by, never walked past here before. So today let's take a walk around this little inlet, check out some of these boats, and talk about why the housing market's not going to crash, or at least according to the National Association of Realtors, why they say it's not going to crash. And of course, I'll give you guys some of my points to go along with this as well. So the National Association of Realtors is coming out once again this week saying that there's not going to be a housing crash. They're still pointing to this fact that home prices rose 4% year over year in the fourth quarter of 2022. And the funny thing is, because home prices have been dropping so much, they're not going to be able to point to that year-over-year figure for much longer. And that's kind of the sad part about this, because they're using the year-over-year number saying, oh, look at that, you know, we ended the year last year still 4% higher than a year before that. But before this year is over, they're not going to be able to point to that year-over-year statistic anymore, because prices have been going down month by month right now. And they're also saying in this report how existing home prices increased in 89% of the 186 metro areas that they keep track of, and 18% of those cities saw prices jump by double digits. Now, that's why I'm always telling everybody, like, listen, you need to pay attention to your own market and what's happening in your area, because are there places where prices are still going up? The answer is yes. I'm not going to deny that. It's definitely true. But in far more places, prices have been coming down. So the National Association of Realtors right now is naming 3 reasons why we're not going to have a housing crash. And their reasons are: home inventory is still low, mortgage rates are falling, and pending home sales are rising. That's their argument. So let's break this down to see if there's any weight to this whatsoever. So yes, to their first point, home inventory is still at a pretty low point, but so is demand for buying a home right now, because like we've been discussing, affordability is very low right now. So the demand for people to get out there and buy is nowhere near what it was a year ago, and they're talking about how pending home sales are going up, and that this is going to be the end-all be-all of the housing market not falling apart this year. We already determined in a previous video last week that the average household needs to make well over $100K a year just to afford the median price home in the country right now. We know that a lot of people and a lot of families don't make this kind of money. And even though mortgage applications have been ticking up a little bit, now that the rates are about a percentage point lower than they were a few months ago, they're still nowhere near where they were a year ago. And that's like this huge glaring issue that they're just ignoring right now at the National Association of Realtors, which I don't understand why. I don't know why they would do this, other than the fact that they're just trying to prop up the market, guys. I mean, that's really their incentive here. They need to make sure that people are still interested in buying a home this year, because if home sales collapse, then, you know, the amount of real estate agents in the business collapses as well, which we're already starting to see, and therefore the National Association of Realtors is going to collect far less association dues from agents. So this is bad news for them when the market starts to slow down. And the problem with all of this is we're just hearing so many lies and so much misinformation about the housing market, about the economy, about the recession, and just all these things that I just completely don't trust. And just like I don't trust all of these crazy stories that we're hearing talking about how, you know, nothing's really going on out there and everybody should just resume business as usual, I also don't trust public Wi-Fi either. And that brings me to today's video sponsor, Surfshark VPN. Now, one of the most important things to me in today's day and age is online privacy, especially when I'm traveling and doing my road trips. You need to take a look at Surfshark VPN. With a quick quick of a button. All you need to do is connect to their servers and you will be anonymous and invisible online. And this is especially important when you're on the road or using public Wi-Fi, so nobody can spy on you or steal your personal information. I've also been using Surfshark recently in order to find some really good travel deals, because when you're using the Surfshark VPN, you will be anonymous and not limited to your locale in terms of online pricing. That includes expensive items like searching for a good deal on a flight. And if you sign up for a 24-month of the Surfshark VPN plan today, not only do they give you 3 months for free, but they'll also give you 83% off if you use my promo code down in the description below or use the QR code on the screen. And for whatever reason, if you're not happy with the Surfshark VPN, it has a 30-day money-back guarantee, so you have nothing to lose. Here's a big thing that totally debunked their pending home sale argument here, talking about how, pending home sales have risen for the first time in 7 months. Okay, great. So they've been going down for the previous 7 months and they're only going up now, right? But if we look at this graph from Redfin showing the last 3 years of the housing market, well, really the last 2 and just the beginning of this year, so we're talking 2021 through 2023, you can see that 2023 here is represented by the blue line on this graph. And even though pending home sales have been ticking up, it's still far below where it was in 2021 and 2022. And the other thing to notice from this is it's very common for pending home sales to start ticking up this time of year. So this is just a seasonal pattern that the market always follows, just like we talked about in previous videos, where the seasonal pattern is that we always get this surge of inventory starting around the end of February, lasting all the way till July. And they just said, oh, inventory's low. Well, it's not going to be low for very much longer, guys, because we know just by looking at history that inventory starts to go up pretty soon and will continue to go up throughout the summer. And here's another fact that I have to debunk what the National Association of Realtors is saying right now. If you look at this second chart here from Redfin, median home sale prices are only up 1% year over year from 1 year ago today. And so since the trend line has been that prices have been falling since the middle of 2022, it's reasonable to say that within the next few months, easily by summertime, we're going to see negative year over year numbers, because every month we've been posting negative year over year growth in the market. So we're seeing losses right now. So to me, not only does what the Realtor Association just really not hold any water right now, but also the crazy thing to me is that they never mention the recession, okay? Nobody wants to talk about that. They never mention the staggering amount of layoffs we're seeing in all different types of industries right now. They never mention unaffordability as being the biggest hurdle for all home buyers right now. They never mention renting being cheaper than buying almost everywhere in the country at the moment. They're not talking about consumer sentiment, how more than 80% of the home buyers that were surveyed recently by Fannie Mae think that it's a terrible time to buy a house. Really, the list goes on. They only have 3 weak points saying why there's not going to be a housing crash, okay? They have rates are going down, which now they're going back up, but remember, they're going to fluctuate throughout the year. There's not enough inventory, and they have that pending home sales are on the rise, which clearly we can see by the previous graph that this is a seasonal trend that we see every year. And let's take another quick look at affordability. 1 year ago, the median sale price was $344,000, and mortgage rates were at about 3%. So your mortgage a year ago for a home like this would be $1,692 a month. And to buy that same house this year at $344K, because interest rates are higher, would cost you $576 more per month. And that adds up to almost $7,000 more a year out of someone's pocket to buy the same house because the rates are double. People don't have that extra $7,000 a year right now. And how do we know that? Well, we know that because credit card usage is skyrocketing, people aren't paying their bills, and if people had all this money to go out and buy, we would see record amounts of closed sales right now because rates are down. We would see everybody paying off their credit card debt because they're so rich. But in fact, we're seeing the opposite. But once again, you guys should use your own judgment on this, form your own opinions, listen to me, listen to other people on YouTube, listen to the news, listen to whoever you want, but use your own head and watch your own market to really determine what you think is happening. Because to me, the overall sentiment and the overall narrative that's being pushed about the housing market has bottomed and things are just going to get better from here, guys, is just complete BS. Are there going to be places that withstand this entire downturn much better than other places? Absolutely. But you should know already if you live in one of those places or not, because if you've been paying attention to your market, then you would know this. Now, we've talked a lot about on the channel iBuyers, but I don't know if anybody's ever heard of this business model called Power Buyer. And what a Power Buyer is it's a company that helps people that are looking to buy homes make cash offers on places that otherwise wouldn't be able to make a cash offer, and it helps them compete in the marketplace. That's what they were doing when everybody was paying cash. People were offering over asking price and waiving all the inspections and la-di-da-di-da. But now that the market is cooling down, some of these companies are stuck with hundreds of homes that they acquired on behalf of their clients. And this story is yet another perfect example of how a business that was thriving when interest rates were low and the housing market was hot are completely suffering right now that everything is starting to reverse. The market prices are falling, interest rates are higher, people are not nearly as interested in buying right now as they were a year ago. So now you have these power buyer companies that are basically stuck with these homes, and they're going to be next to start liquidating these properties because they're not doing anything with them, they're not renting them, they're not living in them. And things are going so poorly for these power buyer companies right now that they're talking about shifting their focus over to sellers now who are hesitant about listing in a down market where prices are coming down. So they're trying to think of creative and tricky ways to get sellers to start listing their homes in this environment instead of focusing on helping buyers pay cash. They're only going to be focusing on the most competitive markets when it comes to these power buyer programs from now on. And a lot of these power buyer programs received a bunch of their startup capital from venture capitalists, and now they're not putting money into these things anymore. And to me, this is just another example of a failed business model, just like iBuyers, something that only works when everything's going up. And to me, that is no way to run any kind of business, and it's basically a guarantee that you will go out of business when times get tough. Here's something interesting. If those unemployment numbers are correct and they're telling us the truth, that unemployment is at the lowest levels that we've seen since 1969 at 3.5%. Amazing, right? But one thing that's kind of contradicting this figure a little bit is the fact that in 2022, the U.S. Bureau of Labor Statistics says that about 47 million people quit their job last year. That's a staggering amount. The number one place where people are actually quitting their jobs is over in Alaska, and the states that are followed up by it are Georgia, Montana, Mississippi, and Arizona. Those are the top 5 states when it comes to high quit rates. And these places right now are seeing about 107,000 resignations per month at the moment. And nationwide, the average is a little over 4 million people a month quitting their jobs right now. Now, obviously, a lot of these people are looking for better opportunities or already found a better opportunity, and that's why they quit one job and leave another one, or maybe they're starting a business or having a family. Who knows, right? But because the quit rate is so high right now, you're seeing more industries start to offer more pay as incentives to try to keep employees that they already have and attract new ones. You're also starting to see them offer benefits that they didn't have before, and this is even more prevalent in a lot of blue-collar jobs because those type of jobs in the past typically didn't have the best benefits or the best pay, and now they're starting to have to increase these incentives to keep people around, right? So they're starting to offer people health care plans, retirement plans. They're also offering them free lunch and commuter benefits if they have to drive in. But think about this for a minute. The Fed has come out and said time and time again that getting inflation back to 2% is the number one goal at hand right now, right? In a labor market like this, where we have the lowest unemployment numbers that we've seen in over 60 years, what do you think is going to happen to the Fed's interest rate hiking plan? Do you think this is going to have any influence on it? Because I do. I think that the more we see these bullish reports out there about how everybody's raising the pay and offering more incentives and things like this to keep employees around, and wages are going up because of this, then the harder and longer the Fed is going to have to crack down with the interest rate hikes, which is just going to make the recession worse and ultimately, put a lot of people in the poorhouse. I've said this before, and I'll say it again, that this is kind of one of those situations where good news is actually bad news. Obviously, it's great that people have opportunities right now, but the Fed is actively looking to take away those opportunities until they get inflation back to their target rate. So if you're a job switcher out there, make sure you get a good one, and it's hopefully in an industry that's going to be necessary when times are tough, because otherwise you could be setting yourself up for big trouble right now. And here's another thing that can just bring the whole game down pretty quickly, and that is the stock market. In fact, Morgan Stanley just announced this week that the stock market is totally disconnected from reality right now and is going to hit a bottom this year. And they're saying that stocks are completely ripe for a sell-off at the moment because the market is prematurely pricing in a pause in Federal Reserve interest rate hikes, which the Fed has said time and time again that that's not what we're doing, but it's not what the people that work at the stock exchanges are thinking right now. It's not what they're actually actively doing. That's the real problem with this. And so basically, even though the Fed keeps saying time and time again that we are going to raise rates again and again and keep them there for as long as necessary, the market is refusing to hear this. They're not accepting this as a reality right now. And so that's why Morgan Stanley is saying that they're setting themselves up for disaster and that this is going to bring the entire stock market down sooner than later because they're just living in a fantasy world right now. And I think this whole thing with the stock market is very representative of a lot of people's mindset with all of this, thinking that, there's no problems and everything is just gonna magically work itself out over the next few months, and it's all up from here. And they're saying that prices in the stock market are just as disconnected from reality since this whole bear market started. And I think the same can be said for the housing market. So, the National Association of Realtors are a lot like these people that are trying to make sure that stock prices stay as high as possible. And once again, they're just ignoring the fundamentals here, and especially when it comes to the Treasury yields. The 2-year Treasury notes exceeded the 10-year yields by the most that they have since the early 1980s last week. And no one wants to look at this, guys, even though this has been the most reliable predictor of every single recession that we've had over the past few decades. But they don't want to look at that. They don't want to acknowledge this as a problem. And so why is this happening? Well, to me, it all is basically the same as the National Association of Realtors, like we talked about earlier, pumping the housing market. The people who are in charge of the stock market are pumping that because they have a lot to lose. And I'm pretty sure that all of this just comes back to the fact that these people are so greedy and so money hungry that they're willing to do or say anything to make it look like things are good, so that way people continue to buy in. That's the same goes for stocks and for houses, because as soon as enough people wake up and stop doing that, then the whole game is over. Everything collapses almost overnight. And especially with the stock market, since it can move so quickly in just a day, people who are making big money off of these bear market rallies, you know, kind of like that really know how to trade the market. Like, I don't trade the market, guys, but I'm sure a lot of you who watch my videos do, and you know how to make money in the very short term when we have these market rallies. You know, you'll buy in, you'll make some money, and then you'll sell it off, make some money, wait for it to go back down, rinse and repeat. And that's why people don't want this to be over with right now. And when it comes to real estate, just like we said earlier, you have these big conglomerates like the National Association of Realtors and the Home Builders Association and all these people that rely heavily on real estate sales, trying to talk things up that it's starting to become the bottom and it's a good time to buy again because it's only going to be back to the moon from here. But like I said earlier, use your best judgment. Listen to other people, what they have to say, and you determine what you think's going on for yourself. I'm still sticking with my Boy Scout mantra of, you know, preparing for the worst and hoping for the best. By just doing something as simple as that, really you can't lose, you know? If nothing bad happens, well, I'm overstocked with everything. And if something bad does happen, I'm ready for it. You know what I mean? So to me, there's really nothing to lose by using that mentality. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.